Welcome to the Hedge Invest Newman Credit Fund monthly update for the month of March. March was a strong month for us. We're up more than 1.5%. A variety of drivers. On the macro side, obviously, we maintain our short bias on China, which is slowing down aggressively. We're short through China's sovereign risk, and we're short through Chinese banks. From time to time, we've been playing the Hang Seng for a bounce, but net our structural position is short. So the combination of the short and the volatility trading around China has been quite profitable for the month of March. Away from that, on the macro side, we remain quite negative on the overall fixed income. We think there's a lot of inflation, secondary effect through the labor market, and we think, unfortunately, the war and the invasion of Russia into Ukraine is creating a lot more inflationary waves all across, from grain and food prices to energy, oil and gas. So on that, we remain quite negative. We are still surprised by the equity, but we justify that with the technical inflow, and we remain quite short on that side as well. On the special situation side, our main focus remain the energy transition plays. We think the acceleration that is coming from the war will be unprecedented. I think there is going to be a lot of pressure for the green transition from the climate change stress, but at the same time, there's going to be a lot of push for security reason and for security at the national level, especially in Europe. So we made money on several names. One has been Corre, New Fortress Energy for the gas liquefaction, and some other plays where we think there's going to be plenty of interest. Obviously, valuations sometimes are quite stretched, so we need to be careful and choose our time. Away from that, on the special situation side, on the more credit intensive play, it's been relatively quiet, but we have plenty of plays there, especially on the telecom infrastructure, that we think will play pretty well in the next few months. Overall, the position of the book remains very, very cautious. Tend to be short, both on fixed income, especially periphery, from Italy, Greece, Spain, Portugal, where we see a lot of pressure potentially from a normalization of monetary policy. Overall, very bearish on fixed income, and on the equity and more kind of risky plays, we remain very concerned. We think, apart from special situation, relative value trade, the trend for the market is going to be down. We think the return on financial assets will be predominantly negative from now to the end of the year, whether it is equity, a yield, investment grade, even commodity, probably at the level where we are now. So we remain very, very cautious. April has started with the same kind of approach, and we see a deterioration all across from a growth point of view, with a likely recession going forward, and an inflation very likely to be a little bit out of control in the next few months. Thank you.